Everyone's heard the refrain, cash is king when it comes to running a small business, and it certainly can be true. There are many new or small companies that are profitable but are still forced to close their doors because they didn't learn to manage their cash flow appropriately. That's why careful cash flow analysis is incredibly important when you're running a business. Cash flow analysis is basically keeping track of when and how cash flows into or out of your business. Now, this is different than just tracking your revenues and expenses, because revenues and expenses should be tracked based on when money is earned or spent, not when it's actually received or paid out. Depending on your business, your clients may not pay you for up to a couple of months after you've already delivered a product or service. So you have technically earned the revenue, but you don't have that cash in the bank to pay your bills. There are 3 types of cash flow in any business: cash flow from operating activities, cash flow from financing activities, and cash flow from investing activities. Cash flow from operating activities is that related to the core business, and you'll be able to use the income statement to figure out the cash flow from operating activities by taking the net income and adding back in expenses like depreciation that are not actual cash outflows, and by adjusting for accounts receivable and payable, cash that has been earned or spent but hasn't actually been received or paid. Cash flow from financing activities is that which is related to, surprise, financing activities. Things like loan payments you make or payments that you receive from loans you've made to others. Cash flow from investing activities is that associated with any investments the company has made, like the purchase or sale of land or equipment. A statement of cash flows is one of the 3 basic financial statements, but it somehow still gets overlooked by many entrepreneurs. If you're not familiar with it, you should speak with your financial officer or accountant to get an understanding of what your business's cash flow looks like. You can also buy my business planning book and review the section on creating financial projections to develop your understanding of the importance of cash flow and how to determine and analyze it. Basically, cash flow will give you an idea of the financial health and liquidity of your business by showing you what you actually have available to use to meet your company's obligations. $1 million in profits isn't actually as awesome as it sounds if your cash flow is such that you can't pay your rent and you'll be evicted before you can ever collect that $1 million. You need to make a point of regularly reviewing your cash flow and make any adjustments where necessary to improve the health of your business. If you do spot some problems, try taking a look at my old video for some tips on how to improve small business cash flow. The link is in the description below.
Did you find this video helpful or fun? Then share it with a friend who you think would benefit from the dish, and don't forget to follow me on Twitter and Facebook and subscribe to my channel on YouTube so you never miss any of the latest tips, tricks, and tutorials to help your business grow. And you get to see my adventures through the wide world of entrepreneurship and how I use the freedom running my own business gives me. Also, remember to head over to katecosta.com so you can get in on the conversation about how to build your business to success so you can live your life your way.